Hello students, in the current video I will explain what is equity share capital, its features, advantages and disadvantages, or we can call it as limitations even. This video is very significant for the students of commerce, managements and accounting and finance. Now we will understand what is equity share capital. Equity shares are also known as ordinary shares or common stock, which means other than preference shares. Preference share is also a one type of capital through which company raise money. I will share the link of preference share video in the pin comment, I button as well as in the description box. Please do watch that video to understand better what is preference shares. Equity shareholders are the real owners of the company. In the sense, these people will enjoy the profit as well as bear the entire loss. Equity shareholders have control over the management of the company. In the sense, equity shareholders can appoint the management team as these people are the real owners of the company. Equity shareholders are eligible to get dividend if the company earns profit. Whenever company earns profit, then only equity shareholders will get the dividend. In case of losses, equity shareholder will not get any dividend. Equity share capital cannot be redeemed during the lifetime of the company. The equity share capital is the permanent capital, will not be redeemed, will not be returned back to the shareholders. The liability of equity shareholder is the value of unpaid shares only. If you have any unpaid value of the share which is not yet paid, in case of losses, your liability is to the extent of only unpaid value. You need not to pay more than that. There will be no unlimited liability in case of equity shares. Now we will understand the features of equity shares. When you talk about the features of equity shares, the first one is real owners. As we have already discussed that equity shareholders are the real owners of the company. They will enjoy the profit, bear the entire loss. Permanent or perpetual nature, in the sense the capital once raised cannot be redeemed or reduced during the lifetime of the company except in two cases. In case of liquidation or winding up, whenever we are closing the operations of the company, then we will return the amount to the equity shareholders if anything is left over after payment to everyone. That is debentures and preference shares. Leftover amount will be given to equity shareholders. Or in case of buyback of shares, buyback of share is a concept where the companies can purchase its own shares for two purposes. One is they can either maintain as investment or they can cancel those shares. Except in these two cases, the equity capital cannot be redeemed or reduced. Residual claim. The residual claim refers to the equity shareholders will be given amount that is either equity dividend or at the time of winding up. These amount of equity shareholders will be paid after payment to debentures and preference shares. That's the reason why we will call it as a residual claim. In the sense, finally equity shareholders will be paid. Voting right. Equity shareholders influence the directions of the organization by electing the management team. In the annual general meeting, whatever significant decisions will be taken, that will be passed through voting of the equity shareholders. Therefore, equity shareholders will influence the management team because they have power to elect the management team. Limited liability. The liability of equity shareholder is limited to the value of unpaid shares only. They need not to pay more amount. That is one of the most important features of the company which differentiate the company form of business from other form of businesses. Transferability of shares. In case of public limited companies, the shares of company can be transferred from one hand to another hand. In the sense, the shareholders of the company can purchase the shares in the open market, in secondary market, which creates the liquidity to its shareholders. Whenever they want money, they can get the money by selling of the shares. So these are the features of the equity share capital. Some of the features will become advantages as well as some of the features will become disadvantages or limitations even. Advantages of equity shares. Permanent capital. Since the equity financing is the permanent capital, therefore company need not to again and again raise the money through loans. It is the permanent capital which supports the business as long as the company exists. Ideal source of financing. Equity financing is the best suitable for startup businesses, since the startup businesses will be highly prone to losses and highly risky businesses. Therefore, equity capital is the permanent capital which need not required to be paid fixed amount of any dividend or interest. Therefore, it is the ideal source of finance for startups. No fixed payment is required. With regards to the equity share capital, no fixed amount of dividend is required to be paid. It is not compulsory to pay any amount of dividend. If the company earns profit, then dividends will be paid. If the company incurs the losses, dividends will not be paid. Sometimes company, though it earns the profit, may not pay the dividend because the dividend amount can be reinvested in the company's operations. So that's the reason why it is not mandatory to pay the dividends. Voting right. Equity shareholders influence the direction of the organization by electing the management team. Voting right is also one of the features of the company. Here what will happen? The shareholders can elect the management team, that is chief executive officer, board of directors. Therefore, voting right plays a very significant role, and this is one of the advantages of equity shareholders or equity share capital. Limited liability. Of course, limited liability is one of the best features of the company because in case of losses, the shareholders will not to pay out of their pocket or their personal assets will not be at a stake. Transferability of shares create liquidity. The liquidity can be created through sale and purchase of shares. If any shareholder is in need of money, he can sell off his shares and get the money. That is one of the best and important advantage of equity share capital. Now we will understand the disadvantages of equity shares. Besides having lot of advantages, we have some disadvantages even. Irredeemable. Once you apply your money as equity share capital in the company, you will not get back that money in full. You can, though you will be having the option to sell shares in the open market, but irredeemability is one of the demerits of the equity shares. Higher cost of capital. The cost of capital when compared to debentures will be very high with regards to equity shares because the dividend is also will not have any tax deduction. Because equity share dividend is considered as an appropriation of profit, therefore tax deduction cannot be availed by the company through payment of dividend. Therefore, the cost of capital will be high with regards to equity share capital. High cost of issue. The cost of issue of equity capital is higher than other securities. Other securities here refers to debentures. The expenditure will be incurred more with regards to issue of equity shares in the form of underwriting commission, in the form of brokerage, in many other forms. The companies will incur more expenditure with regards to issue of equity shares. No fixed dividend. This is considered as a demerit. Since we have already discussed, there will not be any fixed dividend given to equity shareholders. That will be considered as a disadvantage. Dilution of control over the management. Each fresh issue of equity share leads to dilution of control of existing equity shareholders over the management. In the sense, whenever company is issuing more number of equity shares, that will dilute the existing equity shareholders' right. This is considered as a one of the disadvantage are. So these are the features, advantages and limitations or disadvantages of equity shares. I hope I made you understand entire crux of the equity share capital. I wish you all the best. Thanks for watching the video. Do subscribe my channel, Mentor the Trusted Guide, and motivate me to make more qualitative, informative videos.